a master trader. I am the signal. All my trades in profit. I am a master trader. I am the signal. All my trades in profit. Once again, my name is Tasha M. Dyer, the creator of the BYOB Cash Out. And we are here this evening. I love it. I love it. I love it. You say this is the best time of your day. Thank you so much. I love it and I appreciate that. As you're logging in, go ahead still, you guys, drop it in the chat. Let us know where you're calling in from. It is definitely time to go ahead and get this call started. Love you guys. Keep dropping it in the chat. Miramar, how you doing? So let's go ahead. Let me share my screen. Right? Want to share my screen with you guys. Baton Rouge, good evening. So what we're doing is we're going to continue from the other night, right? This is BYOB Market Talks, right? BYOB Market Talks, and we are going to continue from the other evening. And so because of that, I want you guys to get in the right habits. I want you creating those correct habits. And so you see I'm on Forex Factory. So I know you had your day kind of fluctuated a little bit. It went up, it went down, right? It kind of went up a little bit, it went down a little bit, it went up a little bit, it went down. And that's because of the things we talked about earlier today with the news, right? We had quite a bit of news. How you doing, Tampa? So we had quite a bit of news that happened, right? And you know, the US dollar went strong, but then a lot of people started following suit with some of the things that the US had done. So things, you know, it just kind of started playing, you know, they started doing some of the things US had done because they saw it starting to work, right? Some of those monetary policies and some of those things that were happening, it was actually working. And so here we are this evening where, you know, I kind of pointed some of those things out to you that, you know, that we kind of looked at earlier. So here we go. It went positive, negative. I know some of you guys, but I still saw all those. How you doing, Milwaukee? I still saw those 777, 777. Now GBP is still on the weaker side, but it is trying to gain a little strength. You saw they had some news today as well. They had quite a bit earlier today. President Trump spoke, right? All of this happened today. So how you doing, Port Arthur, Texas? So all of this happened today. So let us, right? How you doing, Morgan City? So let us, okay, let us go. And we are definitely want to make sure you keep your phones muted. I'm gonna go ahead and mute you guys out. There we go. Make sure you stay muted. And we're gonna talk about, we're gonna go ahead and we're gonna begin using this setup. Now, Bitcoin got a little strength, right, earlier today. This is a setup that I started giving you guys earlier, so we're gonna come back to it just a little bit. It is a setup that I started kind of giving you guys this morning on this morning's call. Oh, before we even get started, if this is your first time on Market Talks with us this evening, let me get a 111 in the chat if it's your first time with us this evening. I need a 111 in the chat, your first time on Market Talks. If it is not your first time on Market Talks, but you're still learning how to cash out, let me get a 222 in the chat. Let me get a 222 in the chat. Welcome back and welcome and welcome back and welcome. One of the things that I want to point out on these calls is we trade with you and not for you. So I'm going to walk you through exactly how, you know, how the BYOB Cashout works. We're going to look at the Vibrata, right? We're going to look at these 15-minute calls on the Vibrata, these alerts that come through on the Vibrata. That's what we're going to do today. And I want you to understand that we trade with you and not for you. So if you dropped a 111 in the chat, you're gonna have to, you'll get adjusted to how we do things. And that's because that's why we walk through those affirmations at the beginning of the call, right? That's exactly why we walk through those affirmations, because what those affirmations do is it helps you understand that you are the signal. So you're not on here to get signals. You're not on here to get your take profit, to get your stop loss. That's not what we do on this call, okay? We help you identify trades. We help you understand how the market works, how it talks to you, i.e. why this call is called Market Talks, right? BYOB Market Talks. You're going to learn how the market talks to you, how it speaks to you. You're going to be able to understand. So if you're in that Telegram chat, and if you're not in the Telegram, you want to get in the Telegram, because what's going to happen is you're going to begin to understand where those 777s come from. Why is everybody dropping something different? Why is it this person cashed out on this currency pair, but somebody else cashed out on something different? It is because they dropped their own 777. The market is speaking to them individually as a person, because they are the signal. That's what this is all about. You generating wealth, you having a wealth creation for your family, right? 1 million families financially educated and empowered. That's what this is all about. So what should be happening, if I'm looking at this 1 hour, we now have my 1 hour where my stochastic, the blue line. So if you're on a 5 o'clock call this morning or the 9 o'clock call, whichever one we looked at this, the stochastic is now blue line crossing over the red. It did gain a little strength earlier. It pushed up a little bit, and you can kind of see even on the 4 hour where we're starting to get that blue line cross over. So we're beginning to get that momentum where it should kind of sail down, and you can kind of see where this yellow line is, where my sales should be coming down to. That would be a good take profit if you're trying to sell. Now, of course, you can drop another take profit in here if you want to. You kind of drop another take profit in there, but of course you want to have that, you want to wait until you get this 15-minute for that tighter entry lined up. So it's not ready just yet. You know, this is how cryptocurrency moves, though. This is just how it works. And I'm showing you this because quite a few of you all have quite a few of you all have asked me to look at cryptocurrency on the calls. And this is why we don't look at it every day. You know, this is why, because cryptocurrency moves in impulses. It impulses. It moves when it's ready. So, but you can kind of see that it did have a drop already. So it did have one where it hit this support line. And, you know, this is where it's at, where now it's sitting on this support line. That's actually right here. So it's sitting on this support line right here. And but if I look at my hour and my 4 hour, I'm finally at that point, you know, where after all day, we're finally at that point where we have some confluence. And, you know, if you've been consistent on these calls, you know, I can finally show you where you have that confluence on that cryptocurrency. You need that confluence to be able to trade it. So if I have that confluence, now I can begin to trade it. So when that 15-minute pulls back, and that gets ready for my tighter entry, right? You drop down to that 5, even my 5-minute is not ready, then you would be able to go trade that. So that is what we're looking at as far as that's concerned. So that's your watch list. As far, you know, that's a watch list for your cryptocurrency, for that BTC. Now let's go talk about the BYOB Cashout. For those of you all who are just joining us for the first time, I'm going to pull up this USD because that's one we've been looking at quite a bit. Let's talk about this, and then we're going to look at some of these 15-minute alerts, okay? Let's do that. Now, here we go. I'm about to do it right now. The question in the chat is, hi, I'm new. Can you please explain time frame confluence? I'm about to do it right now. That is the purpose of me doing it. I just wanted to kind of get that trade out of the way because that's one that we looked at earlier, and then it gained strength on us with all the news. So I wanted to give the ones that were on the calls this morning, you know, I kind of wanted to go back and kind of point that out. I wanted to give them that because it kind of gained some strength on us today. So for those who are on that 5 or that 9 o'clock call this morning, I wanted to go back and show them what happened. So now, BYOB cash out, BYOB cash out. And I go over this on every call because it's something that you need to know how to trade. So at the beginning of each call, we do kind of go over this, but I do review the trades as well that we have taken, or trades that we were waiting on to set up, or, you know, anything like that. We do look at those trades. So now the stochastic, and BYOB cash out uses 3 indicators, okay? It uses 3 indicators. It uses the stochastic, it uses the Hikinashi candles, and it uses a PSAR. This is where you see them. Now, my stochastic is the indicator that is down here. My Hikinashi candles are the candles that you see right here. The dots is my PSAR, okay? The dots are my PSAR. Now, my stochastic is right here, down here. This is the only one that's by itself. That should help you remember that. So the one that's down here that stands alone, that's all by itself, is the one that you should look at first. Why should I look at that one first? I should look at that one first because that is a leading indicator, okay? That is a leading indicator. These are lagging. All 3 of these are actually indicators, okay? If I change my candles to traditional Japanese candles, this is what they look like. So I want you to understand, even my candles are an indicator. Hikinashi candles are an indicator, okay? So when you pull up your MetaTrader 4 on your phone, they're gonna look different. When you're looking at your account going back and forth, and you see the difference in how they look like. So when you're seeing, you know, the pullback, and you're seeing the fluctuation in your account balance, but you're looking at the candles looking all nice and smooth, you see how they just look like it's a nice move downtrend? Because it's an actual indicator, okay? That's where it's go. I want you to understand that. So these dots are an indicator. All 3 of them are an indicator, but these are lagging, this is leading. So I'm gonna look at this one first because it's a leading indicator. So when I look at my stochastic, you notice that it has numbers that run across the side. The numbers up here is my call price. This is the actual price of this currency pair. So when I'm looking at this price, this is my pip movement. When I'm looking at this is actually where I am. I'm looking at my stochastic, where this runs from 0 to 100. Now I'm focused on this shaded area that runs from 20 to 80. Now, when I see this, I'm noticing that the blue line crosses over the red in a downward momentum, okay? And when it's around that 80, I need that blue line to cross over the red in a downward momentum. When I'm seeing this, I need the blue line to cross over the red around the 20. On a naked chart, are there any indicators? If you're trading a naked chart, you're not using indicators, okay? If you're trading on a naked chart, you're not using indicators. So my blue line cross over the red for a buy around the 20, around the 80, you know, around the 80, I'm looking for a sell. So this crossover is very, very, very important. This crossover is very, very, very important, okay? I want you to understand that. Now, once I've identified what I'm doing, I want you to understand we're on a 15-minute chart. Understand we're on a 15-minute chart. So then what I'm doing is, once I've identified that I'm looking for a sale, I'm going to come up here and I'm going to begin to look for, say, sale setups, right? I'm going to begin to look for sale setups. Now that I know that I'm going to begin to look for sale setups, I'm going to grab this arrow because we're looking in history. We're looking in past tense, okay? So, you know, we're definitely looking in past tense. So this is what it will look like in actual time. But I want, when we do our time frame confluence, I need everybody to be with me and not behind me. So I want everybody's eyes to look at the same thing. And I'm saying it to say, don't go put an arrow on your chart because you will be wasting time. Because this is what it would actually look like for you, right? This is what it would actually look like for you. So don't go dropping arrows on your chart, okay? Don't go dropping arrows. Now, when you do that, I want to first drop, this is where my time frame confluence come in. So when I do that, I'm going to come here and I'm going to drop down to my 5-minute chart. When I drop down to my 5-minute chart, I'm looking at, I got my 5-minute chart. Now, why do I do that? Because the 5-minute happens before the 15. Each one of those candles is 5 minutes. My 5 minutes happens before my 15. Understanding that my 5-minute happens before my 15, that means that I'm looking at that one because that will tell me if I'm entering in a correction, or if there is a reversal, or if there is something that takes place, it will happen actually there first, right? Then I'm gonna jump up to my hour. When I jump up to my hour, right, my hour is going to tell me the current swing of the market. So the current swing of the market is actually in a sell, okay? The current swing of the market is in a sell. So right here, if we would have been looking at this for a buy, so even if I would have went here and been looking right here for this buy, my current swing of the market right here, it wasn't in a buy yet. So my swing of the market actually was not in a buy right here. So now this is actually in a sell, but this one wasn't in a buy. So now that was a swing in the market. So if you drop the 111, no, you would not take a sell. The question is, will we take a sell instead? No, you wouldn't take a sell instead. I'm gonna finish walking you through this. So right here, you're taking this sell. Now, if you drop the 111 or a 222, you grab your 10 pips and cash out, okay? Because I want you to understand, you know, you grab your pips and cash out. Now, if you've been trading BYOB Cashout, you understand how it works. You understand your support and resistance line. You understand that you can actually trade this to a support and resistance line, okay? You can actually begin to take more than 10 pips. This is not just a scalping strategy. I definitely want you to understand that this is not just a scalping strategy. You can actually obtain more than 10 pips. But I want you to begin grabbing your 10 pips and cash out, because that will help you with foundational understanding. It will help you get comfortable in the market. It will help you with that trade. Now, if I stay focused right here, I will jump to my 4-hour. If I jump to my 4-hour, now what I see right here is what's my trend of the market. You can see this is kind of like in a correction right here, because my overall trend, because if you want to actually look at the overall big picture, so I can't say, oh, that candle tells me the trend, because look at the overall. You want to scan out and actually look at the big picture and what's actually going on in the market, right? You definitely want to look at what's going on in a big grand scheme of things. Now, going back to this buy, right? Let's go back to this buy. So go back to this buy. When I'm looking at this buy, I have this buy on the 15. I go to the hour, okay? I go to the hour. So understand that my hour, we know we've been selling, right? We can tell we've been selling. For GBP, GBP is the only exception to the rule. I have to use my hour, okay? I have to use my hour for my time frame confluence, for my 10 pips and cash out. I must use my hour for my 10 pips and cash out. I must use my hour for my 10 pips and cash out. However, I need to use, GBP is the only exception to the rule because the amount of liquidity that is in the market, meaning I can drop down to my 30-minute, seeing that the 30-minute has begun that shift already, and you can see that I can get my 10 pips. I can actually go to the 30-minute, and when I go to the 30-minute, I can actually see that that one has already begun to turn green. So I definitely could have grabbed my pips. You would have definitely grabbed your pips on that trade. Definitely you have grabbed your pips. And even if I'm looking at, you can see on this 4-hour, you would have been, honestly, when this one turned on that, like if I'm looking at my support and resistance, this one actually traded up to, you know, just looking at this grand scheme of thing, this one actually went to that support line. You can kind of see how this one traded up to this resistance line right here. So if the hour and the 4-hour are showing a buy, and the 15 and the 5 are in a buy, is that where you get in? Yes, you get in. Yeah, so if you're trading off the hour and the 4-hour, you use the 5, and you use that 15 and that 5. You can use that for a tighter entry. Yes. And So yes, most definitely. And that's why if you look back at the trainings that we did, right? If you look back at the trainings that we did for the Vibrata, I started with the higher time frames just to kind of make that same point that you just, to answer that question that you're asking. That's the exact same point that I was making. That's the exact same point. Correct. If the 5 and the 15 are buying and an hour is selling, right, you do not enter. Now, GBP is the only exception to the rule. That's what I mean, because GBP has so much liquidity and you can grab a few pips because what you're seeing now, but this is where you being the signal, okay? This is where you being the signal have to make that decision, because if you have the hour and the 4 hour buying, right? And the 5 is selling or vice versa, right? And and GB in that 30-minute is doing what the 15 is doing, and it's a GBP pair on a counter trend trade for GBP, it can give you about 30 to 50 pips. So GBP will give you about 50. I mean, GBP will put the liquidity out there for the pips. That is why GBP is the only exception to the rule. GBP is the only exception to the rule, the only one. So if I was looking at something else, it would be no exception to the rule, right? You wait for that hour. You just have to wait for that hour, and that's it. GBP is the only exception to the rule. That's it. That's the only one. That is definitely the only one that will give you that exception to the rule. So now let's talk about that. That's the BYOB Cashout. Now let's talk about what we have with these. No, you won't ride it longer if that hour is not. So, okay, so the question, so everybody can understand it, right? The question for GBP pairs, you look at the 5, 15 and the 30. If they're buying, you could take it and ride it longer. Now, not if the hour and that 4 hour is not going with it, because it will be a counter trend trade. I mean, you're counter trend trading. And if that hour is not going with it, you're counter trend trading. And what that means is you're going against the trend. And so you don't want to try to take a trade like that and go against it. So you definitely don't want to do that, to try to go longer, because what's going to ultimately happen is what's going to happen is there's going to eventually turn back around. It's just that GBP has so much liquidity, you can scalp that real quick, right? You don't have to worry about your pip reaction time. That's how long it takes you to get into the trade. I mean, not saying you don't have to worry about it, but that's how long it takes you to get into the trade, right? Oh, you got to be kidding me, right? That's how long it takes you to get into the trade and things like that. So really, so that's how long it'll take you to get into the trade, and just things like that. So let me see here. I wrote some down. I wanted you guys to see it though. Oh, yours went down too? Let me see. I see, I wrote some down, but it's like I want you guys to see it. I know on Tuesday you didn't get to see it. Okay, here we go. I'm gonna pause it. Okay, so what I did is I paused it, okay? Now, good. So I paused it. That's a cryptocurrency. So when you're looking at this, okay, now when we're looking at this across the bottom, you see you have your Forex alerts, you have your cryptocurrency, okay, you have your indices, and you have your metals, okay? Okay. Now, this is what we have, okay? Now, we're gonna walk through a few of these, okay? And so I got a potential buy, okay? I'm gonna use this Vibrata. We got a few of these. So I'm just gonna drop this on here. I'm gonna come here. So I got a call price. Okay, I got a call price at 200051. Okay, that's the call price. So this is the call price that they gave it at. And then, so understand this, this says what potential buy. And then it's green right here as well, but it says potential buy. Now, I want you to come here for this vertical line. And I'm looking at my UTC time was 23:45. It gave it to me an hour and 40 minutes ago, right? So 23, I'm looking at the bottom where the time comes across the bottom. And it's 23:45. What, 30? And you're looking at AUD. This is a training call and not a live trading call. So the purpose, and so you are definitely the signal. And that's actually the currency you're asking for is actually on the list. So we'll get to it probably. But this is a training call. So if I can get to it, we will. Oh no, it's fine. But if I can get to it, don't say sorry. But if I can get to it, we definitely will. So if I can get to it, we will. But I just want you to know that, you know, like in the morning time, we do a lot of those. I'll drop those in there and that you give me. But, you know, so no worries, no worries. So tonight I want to pull from here for the purpose of what we're training on. So didn't I just fix it? 200051. 20051. 20051. That's right. All right. All right. I'm like, okay. So this is, okay. So they're saying it's a potential buy, right? It's a potential buy. So as you can see, this is where you get a lot of the questions that you guys give. Well, it said it's a potential buy, but it's going into a sell. Well, a lot of these get called in a correction, right? So I look here and I want well, it was going into a buy, right? And remember, it says potential. So this one just hasn't played out yet, okay? Because it has the potential to to go, and it'll look like what is happening on my hour. I want to check my higher time frames. You have to come apply the strategy. So I definitely want to come and I want to apply my higher time frames. So if I'm looking at my hour, what this was called after, so it's GBP is weak right now. So you want to keep in mind you have a lot going on in the market right now. That's why we check what? The news first. So you have your technical, which is what we're doing, and then you have your fundamentals. So if I'm looking at my technical, right, my technical setup is coming. And then on my 4 hour, you can kind of see on my 4 hour what's happening. My stochastic is beginning its curve. So this does not mean, because it's called here, it does not mean that my trade is already played out. And if I look right here, you saw my 4 hour is beginning its curve up. But now what do I see? I see a stochastic where my blue line is crossed over the red. I see a green candle with a flat bottom, and I see a PSAR actually about to flip. And so when all of that happens, if I'm looking at market structure, you are going to be able to trade this up to at least when I look left, you should be able to trade this up, right? So just because it was called an hour and 40 minutes ago doesn't mean that the trade, right, has played out. You still have time to take that trade. So I should be able to trade it to the left looking at market structure. So this is that call price they called it at. So you actually, now you have a watch list trade, right? You actually have something on your watch list. So this doesn't guarantee me that, right, you're looking at, wait, what time frame should everything line up before we enter? What time frame did they call a trade on? So what time frame was the trade called on? This was called on the 15th. So when you click this, it's going to pull it on the 15th. What we did is we went to the higher time frame. What we traded on Tuesday was the 15th. So now we're just looking at trades on the 15th. So I actually showed you on Tuesday, if you go back and watch the training from Tuesday, I showed you trades that played out already. I showed you trades that have already played out. So now I'm showing you trades that haven't played out, so you can actually go look at them and line them up for yourself. So Tuesday, we showed you trades that have already played out. And what I showed you before that is we started with the hour and the 4 hour. You know, I showed you how you can kind of click here to where you can start, because the higher time frames tell you where the market's going. So just like when we do the BYOB cash out and we still go check our time frame confluence, nothing's changed. So just because we come here and we pull it from here, nothing's changed. I still need to check my time frame confluence. So even when I go and if I want to pull my trade from the higher time frame, that's because I can pull it from the hour to 4 hour, understand that that's where the market is going, right? Because I might want to trade from the higher time frame. Understand that that's where the market's going. The higher time frames tell me what the market is actually doing. And then I can use my 15 for a tighter entry. Or I can pull a trade from my 15-minute and I can check my higher time frame to make sure it's confluent, because if it's called here on the 15, more than likely it's called in a correction. Does that make sense? Because it's all confluent with the higher, the Vibrata is calling it in confluence with the higher time frames. As opposed to when we look at it, we're looking at it and we have to check to see if it's income. When we just put the trades in there, we need to check to see if it's with the trend or if it's counter trend, because we don't know. We got to go check it. When the Vibrata calls it, remember the tool does the heavy lifting for us. So when the Vibrata calls it, it's already calling it more than likely. Remember, it's a tool. There's no human element to it. So when a Vibrata calls it, more than likely it's already calling it in confluence with the higher time frame. But it's giving us that entry, so it's not ready at that moment. So it's not a signal. So it's no signals. You apply your strategy and voila. Apply BYOB cash out and voila, right? And this actually helps you get more than 10 pips. But you need to understand some market structure. If you don't understand some market structure and some support and resistance line, do your 10 pips till you do. Go watch go watch the playlist. Trading the BYOB cash out. Go watch the playlist market structure. Go, BYOB challenge is that YouTube channel. Go watch those two playlists. Go get familiar, and it's gonna help you. And then this is a playlist, the Vibrata and the BYOB cash out. These videos are there for you to go back and reference as well. This is how you become the signal, right? So you have this one, okay? Now let's look at this one. Got it? Questions? Questions, comments? Testimonies? I said, ooh, I get it. You're welcome. You're welcome. I want you guys to use the tools. They're there for you. They are there for you. Enroll, learn, profit. Enroll, learn, profit. You think you've been missing setups because of time? Nope. That's why I'm like, let's go over this. Let's go over this. Nope, you have not missed the setups. So this one calling for a sale, right? So if I look, now look at this. So if I look, this has been in a sale, okay? So we know we've been in a sale. That's a strong correction, strong impulse correction, strong correction, right? So, but look what it's doing. Because, okay, and I'm repeating this so everybody doesn't have to go back. You're new to Vibrata, but not to, you're new to the Vibrata, but not to IML. Why does it not give you a stop loss and take profit? So the space is there for it. I can't answer that, but what I can tell you is you are the signal. I can tell you you are the signal, and I can tell you that you don't want signals. I can tell you that. So be grateful that they don't. I can tell you that, because if you are the signal and you understand how to determine your own take loss and your own stop loss and take profit, you will actually put yourself in a greater position to put yourself in greater profit. That's how you generate wealth. If you sit back and wait for me to give you your take profit, if you sit back and wait for me to give you that, then you're limiting your income. You are limiting yourself. And you're also limiting your understanding. Because if you are waiting for me to do it, right? And for example, right, this is a call price right here. A call price is nothing more than a support and resistance line, okay? A call price is, a take profit is nothing more than a support and resistance line. A stop loss is nothing. I tell you don't put your stop loss on the support and resistance line. So I'm gonna tell you to put your stop loss above the PSAR, below the PSAR, right? You want to understand how to do it for yourself, okay? You have to know how to do it for yourself. So if you're looking at this, okay, and you see this, and it's right here, then if you're looking at this, what I see so often is people will not take a trade, or they will miss a trade because my trade didn't activate, or I didn't get in, or it almost hit my take profit, or so many different things happen, or they didn't see it, or they were looking at the trade and they didn't understand it, or just so many different things happen. And when all of that happens, you don't know. Or if you hit stop loss, right? You hit stop loss and you don't know why. You can't understand why you hit stop loss. Or if someone told you to take the trade and it's going, like even these GBPs, right? It's like GBP USD, right? It looked like it was at a floor, and it looked like if I was trading straight price action, it looked like it would have been going for a buy, but it was still selling. And had I told you to buy it, you would have just bought it. But yet, because you understand how the market moves, you understood it was still selling at that point for the last 2 days until today, where we finally got a curve up on it. Okay? So had you not understood that, that's why it's important for you to be the signal and not just do signals. That's why that's important. So be thankful. Now let me get off my tangent. But be thankful that it doesn't. And that's why I don't give you your take profit and your stop loss. I just identify the trade and we going for it all together, right? And then I start looking for your 777. So, and I'm like, okay, I'm looking for my 777 in the chat. Where my 777 at? So, you know, and you're very welcome. So, ha ha ha, 777. There you go. No, it's not gonna say your lines. So the question is about these lines. These lines do not save. So these lines do not save. So now, so for this one, okay, we can kind of see, looking at the higher time frame, how my stochastic is beginning to curve, right? On my 4 hour, it's beginning to curve. So we know we're gearing up for that, even though it's not confluent with my hour, right? It looked like it's trying to form a double top actually, but it's not confluent with my hour just yet. So if I come here, you know that that 15-minute is beginning its, you know, that 15-minute is, it looked like it's beginning that curve, okay? My 15-minute is beginning that curve. So you see why the call price, you see why this call price is way down here. So that's a market pattern. So that's just a pattern in the market. So, and you see why this call price is way down here, because if my, you see how this kind of helps you out though, because if my 4 hour has the stochastic where the stochastic is turning here, my 1 hour is still not confluent yet. Like I say, you see how it looked like it's forming that double top, right? Which the market pattern, that M that looked like it's forming here. And, but yeah, my 15, it gave me a call price for way down here. So that means that it looked like it's allowing for that to turn around. It's allowing for that to, you know, get my confluence and everything else in. That's what it looked like it's doing, right? So you can kind of see where that's playing back out, and you can see where we've been in that sell. So, and it had that pullback. So this tool, I mean, look what this tool does for you, where it kind of gives you the high probability trade. Now, remember, I still want you to do your analysis. It's you see how great it is, but still do your analysis. Do your analysis, because there is no human element to it. You still have to add that human element with the strategy. Okay, you still have to add that human element with the strategy. Okay, you have to add it. You do the 3 confirmations on the 15, and then you do your time frame confluence. So I'm answering the question, but it's basically the strategy is the BYOB cash out. So what we went over with at first, you always make sure it aligns with the BYOB cash out, and then you do your time frame confluence. So you want to make sure it's in alignment with that. So that's what I mean by the human element. Because is everyone gonna play out? Absolutely not. I won't sit here and pretend to tell you that everyone will play out, right? It won't. So do the strategy. Well, the market moves at certain times of the day. If you notice that when you look over here in the mornings, it says high volatility. It has that disclaimer on there that says high volatility. So the London market has high volatility in the morning. So, right, it has that high volatility. And so then this one is gearing up. This one should look very similar to what we just saw, right? Look at there. So that one should look very similar. It does. So do I need to mark it up? You got, when the market opens with a gap, how do we predict the direction it'll go? Or do we wait till after the gap? If you don't know how to trade the news, don't trade the news. If you don't know how to trade the news, don't trade the news. Matter of fact, there's a training that I did, and I dropped it in there on how the news impacts the market. That would be a great one to go watch, because you don't try to predict the news. You don't try to go do that. So I don't ever recommend going to try to trade the news. So Matter of fact, was this one of them? Just to kind of give you a, and then I'm gonna go back to pulling these up, okay? This was a spike on Black Monday, last Monday on the 9th. Was it the 9th? So this was that spike, okay? That, not last month. Yeah, that was last Monday. So this was Black Monday. So this was one of those spikes, okay? And there was a lot of NZDs that kind of went with that. So what happens is the market always corrects itself. So just like in the president's speech today, and he said it before, when he's like, the market will be fine, the market will correct itself. This one took a while to correct itself. Normally, it'll take about, when we see spikes in the news, or when we see spikes in the news, or we see different things that happen, you see the market correct itself within that 24-hour period or something like that. This one did not. When did this actually hit up here? This one did not correct itself until the 19th. So of course, with everything that's happening with the market right now, it's going to take a lot longer to correct itself, but the market corrects itself. So go back and watch that training. Now, I told each and every last one of you all, right? I'm not recommending any pips on an hour call. You have to go watch your support and resistance lines, okay? You have to go watch that. And you have to understand support and resistance lines. So, but I told each and every last one of you all when we saw these spikes, we didn't trade the spike, we didn't trade the news. What we did is we went back and I said, this is going to close the gap. I told you all I did not know when it was going to close the gap because of it was a Black Monday, something new in the market, but I said it was going to close the gap, right? Definitely going to close the gap. And what happened? It closed the gap, and it took until the 19th to close the gap. But when it closed the gap, look at how many pips it gave you. The market corrects itself. That's what it does because you have your different types of analysis. So you have your technical, you have your fundamental, right? You have those analysis. And so the fundamental analysis is what got it off track. But the technical analysis always bounces back. So when it came back, okay, look at how many pips this was. Can I pull this down? And I'm going back to the vibrato. I'm getting back to the vibrato, I promise. That was over 1,000 pips, okay? That was over 1,000 pips. And so on each one of those currency pairs that we had that spike from that Black Monday, on each one of those currency pairs, there was a market correction. And the market will correct itself. So everyone on every call that we have seen this currency pair, that we saw those spikes from Black Monday, the market has just about finished correcting itself. And it's been no less than 350 pips up to at least 1,000. That's the opportunity that I told you. That's your watch list. I told you the market was going to correct itself. And I told you that that's what you guys needed to be holding for. Put those trades in and hold it and ride it out, right? Because the market's going to correct itself. Because that's what it does. So now that, I mean, look at that. That's 1,000 pips, over 1,000 pips right there that the market corrected itself for. And so this is why I say you don't trade the news, right? You don't trade the news. The news is going to correct itself. Because what if you would have been on the wrong side of this? But you know it's going to come back and fix it. So, no, we're not trading the news. All right? Yeah, so we're not worried about the gap or any of that. You just come back and let the market fix itself. Go watch that training. Oh, you are very welcome. You are so very welcome. So, EUR AUD. EUR AUD. Let's talk about this one. So, EUR AUD. So what we have right here, let me get my numbers together. 1.867. I wish some of y'all held it a little bit. I wish I would have held it though. So somebody would have had a testimony, like I told you. So, all right. So this one is looking for a buy, okay? And then, so that one's looking for a buy, and then it was at 23.30. Okay. Ah, you are so welcome. You're so welcome. Now, right here, okay? So you're looking for that buy, okay? And so now that's on the 15-minute, right? And so once again, here we are, like you see, this one is in a sale. And if I go to my 4 hour, my 4 hour is pulling up, my stochastic is pulling up for a buy. My 4 hour is gearing up. So basically I just don't have my confluence like I should have, right? I just don't have my confluence that I should have with my hour and 4 hour. So it'll play out, but my call price is a little far away. So it will definitely play out. And when it plays out, then you will actually have that trade. And if you're trading it to market structure, you know, that's what you should be looking for, is for structure. So why do we need to detect the call price? Does it act as a resistance? Is okay. So this call price is being called on a support or resistance line. So what happens is at that support and resistance line, you have something what's called an area of value. Those areas of value actually hit on a like with the trend, the moving average, which is in the stochastic, the trend, the moving average, it actually hit at one of those, like the trend, the moving average, the support and resistance, it hits at one of those things. So, but that's what you call an entry trigger. Entry trigger, you can set a buy stop or a sell stop. An entry trigger is, you know, you definitely want to analyze it after entry trigger. An entry trigger, you know, if you're looking at a trend, how can I make this as clear as possible? That's not really a good. So if I'm looking at, like, if you got your support and resistance lines, if I can, to answer your question, you know, if I'm looking at support and resistance lines, right? Just to kind of help clear it up. If I'm looking at support and resistance lines, okay? If I'm looking at support and resistance lines, right here at each one of these, you saw I put back on a regular candle so you guys can kind of see them, okay? Like right here, I got a tweezer top, okay? So this is a tweezer top and then it'll pull back down. That's a tweezer top and then it'll pull back down, okay? Now, that's a tweezer top, then it'll pull back down. So, and then right here, you got something else that gives me an entry trigger. So each one of these, that pulls back up, and then you got something right here. I should have pulled that one down a little bit, but that's okay. We're gonna keep going because of the time. So at each one of these, I got an entry trigger, okay? So that's what you got. And so instead of me having to go through and read each one of these, the Vibrata does it for me, okay? This is what's happening. So like, let's say right here, I got tweezer tops right here, right? And so if you don't know how to read the Japanese candles, or you just don't want to, or whatever the case may be, you're going through sort of what the Vibrata does. What this tool does is it actually scans the market, right? It scans the market looking for these. It scans the market looking for these. And as it scans the market looking for all of these, right? As it scans the market looking for these, then it gives these alerts at the high probability ones. It doesn't give you an alert at every single one. Every single one. It gives you an alert at high probability trades. And when it gives you that alert at those high probability trades, okay, then that's when that's when you get this alert. Then you come back and you apply the strategy, right? You apply the BYOB cash out to determine if you want to take the trade. So this is that entry trigger that this is. And so that's what that call price is. So that call price happens, and this is nothing more than a price that runs along here. So if you're not, right, exactly. So if you're not running across here, right, if you're not looking at this or understanding that this is an actual price, right, it's not just a pip. This is actually the price of this currency. This is actually the price of this currency, right? That's what this is. It's the price of that currency. So just so you understand, this is the price of that currency at that time of that currency exchange. So that's and the movement is the pip movement that you're counting. And so that's why when we look at it, okay, that's why when we look at this, when, you know, you guys are, oh, well, I got trading view and I got this, I'm like, you can't be serious, because you got to understand the value that you're getting behind this tool. And so when you, and so when I come back and I look at this and you actually got Mr. Rogers, that's why, you know, for him to be embedded in this tool, right? His background is in investment banking. And so when you actually, like what I'm sharing with you, that's why I said, I don't think a lot of you guys realize the value of what this brings to the table and when it scans. And I don't think a lot of you guys were actually using it the way that it's designed to be used. Because this is the same type of tool. When we say be your own bank, this is literally the same type of tool that your investment banks are using. The big banks, this is the same type of tool that they use. And it's been vetted. That's why with his background, this is why he's speaking when you first log in. Because that's where his background comes from. And that's why they can make this statement. The web analyzer compared to the worlds, and it's cut off right there, but it's compared to the worlds, like trade like the banks. This revolutionary software enables you to trade like the banks from the comfort of your desktop or smartphone. So it allows you to do that. Exactly, the tools are a shortcut to our success. So, right. It appreciate the breakdown of the calls, let us know what to look out for in the pairs. So this is why this statement can be here. That's why that statement can be here, because this has been vetted. So this is what you have in your hands, ladies and gentlemen. And I wanted to kind of go through and pull some setups, and that's what we did tonight. We went through, we pulled some setups, kind of help you understand the validity, kind of broke some down. So Tuesday, what we did Tuesday is I showed you trades that had actually played out on the 15th, and all of them had actually hit, and we were only waiting for one that played out. And today, what we did is we actually looked at, right? Today, what we did is we actually looked at some that hadn't played out. So now you can actually go and you can do some setups, and you can apply to BYOB Cashout, and you can do some setups on your own. And I wanted to show you how to do that with ones that had not played out. But so I know it is definitely time for us to transition. So any last questions, comments, or testimonies before we do?
Yeah, this is